We are starting with a new topic, which is financial institution. I want to believe that we are all familiar with financial institution, and for many of us, the only thing we are familiar with is the banking system. But you need to understand that financial institution is not just all about the banking system. But you need to know that when we talk about financial institution, let's look at the definition first and foremost. You can say financial institutions are those business organizations that helps you to hold or to keep your money. But then it is not only money that they keep. It is not only money. They also try as much as possible, to borrow from individuals. You can also borrow money from the financial institutions as well. And so that will take us to different types of financial institutions. Different types of financial institutions. Majorly, there are two major types of financial institutions. Number one is called, can anybody else tell me? We have the banking financial institution. We also have non-banking financial institution. Now, under the banking financial institution, we have examples like commercial banks. You have merchant banks, you have development banks, and all that. Now, I'm going to be telling us the reason why they are called financial institutions and why they are called that banking financial institution. But the second one is called non-financial or non-banking financial institution. Now, and the very good examples are what? You have hire purchase. You have which other one? Can you guys just tell me?
Building society.
You have building society. You also have insurance. Companies too. Now, let's start from the first one. Don't forget that I told you that under the financial or what we call banking financial institution, I made mention of central bank, an example. We made mention of commercial banks. We also made mention of what? Development bank, merchant bank. So let's start with the central bank. For today, we are going to be looking at commercial bank, but I quickly want to say something about central banks. You see, for some people, they feel that if you need money, like you want to borrow money, that you can go to central bank. But the truth is this: central bank does not give money to anybody. You can't say you want to borrow money and you are going to central bank. It is not going to work. But if you want to do anything, like you want to borrow money, you need to go to commercial banks. Okay. Commercial bank is a bank that accepts deposit from the general public. They also help the general public to keep the valuable items. Valuable items like your gold, like your maybe house documents, gold, and some other things like that. But then, when we talk about the central bank, in fact, in Nigeria, we only have one central bank. Every country has only one bank that is called central bank. For us in Nigeria, it is called Central Bank of Nigeria. Okay? We have only one central bank of Nigeria. But however, we can have different branches. You can have one branch in Lagos. You can have another branch of central bank in Port Harcourt and all that. But that doesn't mean that we are having more than one central bank. Listen to me. Central bank is a banker's bank. Why? Because it is a bank to all other banks. Meaning that even the commercial banks, they also rely on this central bank. Now, what the central bank does is to print money. That's number one function of central bank. Another thing that central bank does is to control the activities of commercial banks. They try to regulate, the operation of the commercial banks. Because if they don't do that, there will be excesses, with most of these commercial banks. You need to understand that commercial banks can be owned by individual organizations. It can also be owned by the government. Now, if they are owned, I'm talking about the commercial banks. The commercial banks are owned by private individuals. Definitely, there may come a time when And when there is problem with the bank, then what becomes of the money of the customer? And that is the reason why central bank will always come in place to regulate the activities of the commercial bank, so that in case if there is liquidation, the customer will still be protected. They will still get their money back. And that is why it is very hard today in Nigeria as we speak for an individual person to say, I want to establish my own bank. It's not as if you cannot do that, but there are some rules and regulations you've got to follow, by the central bank. And that is why you notice that sometimes ago, there were so many issues with banks here and there. When some banks were just collapsing due to recession in the economy and all that. And so at a point in time, the central bank had to, come up with a policy that every bank, commercial bank, must set aside a huge amount of money with the central bank, so that in case if there is liquidation, then the central bank will use that money to settle the customer. Am I making sense to you?
Yes, sir.
And so because of that, a lot of banks will not do just that. So what did they do? They had to amalgamation. That means there was a kind of consolidation. They all came together. And that was the reason why you begin to hear things like this bank, Access Bank, and another bank. I think Access Bank and which other bank comes together to form what is called Access now. I know this present Access Bank we are having is a merging of more than one bank. So that's by the way. But all we need to understand about the commercial bank is that commercial banks accept deposits from the general public. They also accept valuable items. Items like what? Items like your gold. Items like even certificates. There are some expensive certificates that you can't keep them at home. Because if you keep them at home and anything happens, that will be the end of it. But it is believed that they will be kept properly in the commercial bank. Now let's now move on to the characteristics of commercial bank. In fact, from what I have said so far, you will agree with me that commercial banks are different from central bank, right? Now let's now look at the characteristics of commercial banks. Number one characteristic of commercial bank. Who is going to tell me that? As you can see, yes.
They are limited liability.
Okay, now they are called limited liability companies. Why do we call them limited liability company? They are called limited liability company in the sense that if the business, the bank, cease to operate today due to recession, due to financial crisis, now the shareholder that own the bank, they are not going to lose more than what they have contributed in that business. You remember when you were in SS1 that we talked about, limited liability company and then limited liability company, right? So limited means that what they are going to lose is limited. They are not going to lose their own personal properties. The only thing they're going to lose is what? Their share of capital that they contributed, in setting up that bank. So that's why they are called. As a matter of fact, let me even say that their liability, that their liability is even in view in the supply of money. Do you get what I'm saying now? It's in the word supply of money that we have in the economy. Now that is number one thing you need to understand. Number two is that they are owned by private individuals, organizations, or government. That means a commercial bank can be owned by private individual, individual organization. It could also be owned by the government. That's another thing. The number three is that they are, we can say that the motive, in fact this is very important. Now the motive for setting up a commercial bank is to make profit. To make what? To make profit. And the question is, how do they make profit? Because when you save your money in the bank, let's say say you have saved 100,000 naira. You can go to the bank and say you need 100,000 naira. They give it back to you, and then you begin to wonder that how are they paying the salary of their worker? But the truth is this: they make so much money. I can tell you for free. How do they make money? A lot of us save money in the bank, maybe for like months, right? 2 months, 3 months, and that's why we have different accounts. You have saving accounts, you have a current account, you have fixed deposit, right? Now, everything you have in your saving account, you can withdraw it any day, anytime, any moment, without prior notice to the bank, right? Now, but the thing is this: if you are operating a current account, advantage of current account is this: it is possible for you to even withdraw more than what you have in the bank. Do you get what I'm saying now? Your money is used, to do what? To run other businesses. And some people will come and borrow money. When those people borrow money, they are going to pay interest on the money borrowed. So the interest that they pay to the government, part of this will be given to you because they are using your own money, while a larger percentage goes to the bank. But funny enough, that is not only way through which the banks make money. They make money because many a time too, that your money, my money that we have in the bank, they use this for forex trading. Like, yeah, they are professionals that trade forex. Do you know what I'm talking about? Forex trading. Yes. You know, all those big gladiators, big banks, they are the ones that get engaged in foreign exchange. They are professionals that trade for them. And let me tell you something, they trade in millions, not just in thousands. So let's say in the bank they have about 10 million. They can just take a trade now. That trade may not take more than 5 minutes. You understand what I'm saying now? And so when they take, because there are signals that will tell them, oh, it is time for you to buy. So when they buy, and if it goes into their direction, that 10 million naira, they can use it to make another 10 million naira within 5 minutes. You understand what I'm saying now? But that doesn't mean that they don't make losses too. They also do make losses. But one thing is this: they make more gain than the losses, and you don't even know that they do that. So if you are running a current account, number one, you may not be able to withdraw all your money at once. You need to give a notice, especially people with fixed deposit too. You get what I'm saying now? But for the saving, it's not like that. So there are many ways through which the commercial bank really makes money, and that's why you see all those ND. They are, they have big cars, big houses. Not just your money that you and let me tell you, thank God for technology today. In the comfort of my home, I can also trade. You can also trade. You see, a lot of people today, they are not taking their money to the banks again. You know why? Because they know that when you keep your money in the banks will be the one that will be enjoying your money. They use your money to do trading, and they make money. At the end of the day, you go back to the bank, you collect your money. But mind you, inflation is eating us up in this country. You know why? If you have 1,000 naira today now, do you know that economically speaking, 1,000 naira you are having today, it's not going to be the same 1,000 naira in the next 2 or 3 days in terms of the word value. For instance, I think some weeks back now, 1 kg of gas, I think was sold for maybe 1,000, maybe 900. There are some considerations. But as we speak now, what happens? Some are selling for 2,000 naira, some are selling for 1,004, some are selling for 1,500. So if you have been holding your 1,000 naira, or let's say 5,000 naira, thinking that you use that 5,000 naira to buy 5 kg 3 weeks ago, okay, what happens today is that 5,000 naira no longer buy 5 kg of what? Of that gas. Does that make sense to you now? And that is why you see a lot of people, they don't just keep their money in the bank again. However, sometimes it's good to keep your money in the bank. If you don't know how to keep your money, or you are not financially disciplined. You know, some people, when they have money in their pocket now, what happens? They spend everything. But that's why you see some people who take their money there. But if they have a very good business, it's better to invest. Investors are the ones that are ruling, not the savers. So these are other characteristics, the transact business, the wrap people, and at the same time, they are also members of money market. So this is where we are going to today. I do hope that we have really enjoyed the class today. Right? Thank you.